Hey, what's up, everyone? Good morning. Happy Monday to everyone. It is April 24th, 2023. And today we got a lot of news coming out to begin the week, right? We have a huge week that's full of earnings mainly, but there is, of course, news around that. This morning we had Coca-Cola and Credit Suisse actually report earnings. We have a huge earnings list. The main tech companies, or I should say, the beginning of the largest tech companies reporting earnings are this week. We have Alphabet, Amazon, Apple, Meta, and Microsoft. Or sorry, not Apple. Apple is not included. Apple is May 4th. But Alphabet, Amazon, Meta, and Microsoft are all reporting earnings this week. So that's going to be a huge event that starts on Tuesday after the bell. Microsoft going first. Now, we've been ranging quite a lot here in the overall market, and I think that this earnings period with this week, the start of this week of big tech earnings, is what's going to help the markets actually move out of said range. So that's mainly what I'm going to be watching for and keeping an eye out on. If they don't move out of this range based on these earnings, then I'm not really sure what's going on. We're probably waiting for something more cataclysmic. Now, we have the expectation that earnings in the S&P 500 are going to be down 7% year over year, but naturally the first few weeks of earnings that we've had, especially with the banks, have reported pretty good earnings. So we'll see how these tech companies are going to shape up, what they foresee for the future, also their Q over Q growth, so on and so forth. So what I'm looking at this week, right, to start off, we can take a look at some of the news that comes out of the financials first and foremost, right? Credit Suisse has revealed more details about what happened in the troubled bank before regulators worked out a deal for institutions to be swallowed by Swiss rival UBS. And worries of global banking crisis saw the lender suffer a $69 billion of asset outflows in the first quarter, according to the Q1 earnings report. And while the outflows have since stabilized to much lower levels, they had not yet reversed as of April 24th, 2023, which is today. So it's Credit Suisse has posted a one-off $14 billion profit in the quarter due to $17 billion write-offs at AT1 bonds in a controversial emergency rescue. Without it, the bank would have lost more than $2 billion. So rumor also has it that Santander, ticker symbol SAN, is in talks to poach several of Credit Suisse's most senior investment bankers and analysts. So we'll see how that kind of shapes up. We also have FRC that's reporting, one of the other banks that was in crisis mode that we saw out of the US is reporting after the bell today. In terms of economic news, the unprecedented dislocation between short treasury maturities is continuing as traders move cash away from the 3-month bill, which is likely to be most impacted by the debt ceiling and that fight in Washington. And the spread was already at the highest level it's ever been, but the 3-month yield, US 3M, jumped 12 basis points to 5.23% overnight, while the 1-month yield rose 2 basis points to 3.35%, bringing the spread to 187 bips. So lower than expected tax revenue collections have brought forward expectations of when the U.S. could face a default question, though there is likely only 2% chance that the U.S. defaults on its own debt despite growing fear-mongering. So last week, House Speaker Kevin McCarthy introduced a bill that would raise the $31.4 trillion debt ceiling by $1.5 trillion, along with limiting federal spending, which would be enough to avert a default until at least April of next year in 2024. So we also have some other news here, right? S&P is more than stuck in the mud, is stuck in the mud than bulletproof, with countervailing fundamental forces split between positive and negative. So Goldman Sachs head of global hedge fund trading said in a new banking podcast that those forces and why the VIX has tumbled, right? An explanation based on that. So that's something interesting that you can see. The VIX getting beat up. VIX, remember, I think it was last quarter, like 2 quarters ago, when they talked about the JP Morgan manipulation of the VIX. And it seems like something similar is going on. VIX is reaching the lowest level since 2021. So that's something that you want to keep an eye on. We also have mainly just looking out for earnings news. Other than that, right, I'm looking at in terms of the actual market itself, giving you some levels, talking about market maker positioning, talking about where the S&P can last and can move. Today we have a huge area on the S&P which sits at 41.58 to 60. This is a massive gamma area, a gamma hedge from market makers, where they're going to look to actually sustain that level as resistance. Obviously, we've had a very strong rally yet again from the low 30s, but we're inching balance, right, lower and lower and lower, with smaller breaks to the downside in the overall market, leading to believe that we want to hold that 60 area as a resistance, right? That's going to be a first idea for myself. And if we actually get a move under 41.32, 34, that's really what's going to open up the downside, where we can have a 40-point move without too much support to the downside, as that's where price wants to gravitate. But until that area breaks, we are sitting in a balance. So I do want to play that balance. If we get a move above the 60, I would be targeting the 70. I do want to see if the market can go for one last hurrah. But the way that the order flow is shaping up, I would say that we could start the week a little more bearish. So that's what we're going to do. I'm going to see how the order flow kind of shapes up today in our trading room. We'll see again this week earnings. We'll talk about the earnings in the following days when they do come out. We have Microsoft, which I'm huge eyes on Microsoft, which comes out tomorrow after the bell, which is going to start the overall large tech earnings this week as we continue in the following week. So with that being said, right, we have some news that comes out today, 10:30 a.m. Eastern time. We have Dallas Fed manufacturing survey. Other than that, doesn't seem like we have too much. So with that being said, we're going to trade this live in our trading room. I hope everyone is excited for that. Go check that out at tradeproacademy.com. And I'll see you guys there. And check out community.tradeproacademy.com. We post a lot of stuff in there as well, a free Discord, and we'll see you guys next time. We're also planning to do a live stream of a introduction to futures course. So if you guys are excited about that, it's going to be in May. Drop some comments down below, and we'll see you there. Keep watching these to find out when and how we're going to do that. Happy Monday, and start the week off trading more defensively, I'd say.